Now let's see the second method of accounting for uncollectible receivables. And this is the allowance method. So let's see this example. As of the end of its accounting period on December 31st, Xtone Company has an accounts receivable balance of $200,000. Xtone estimate that a total of $30,000 of the December 31st accounts receivable would be uncollectible. So what are we going to do? What we do under this method is that we record an adjusting entry at year end based on our estimate. And how we get this estimate in real life, it's just based on historical experiences. For class purposes, it's going to be given to you. So as you can see here, we have like $200,000 of accounts receivable balance, and we expect that $30,000 will not be collected. So what we do is that we go at end of year, December 31st, and record the bad debt expense for $30,000. As you can see that we don't have a specific customer that we know that customer is not going to pay. So we're just creating this contra asset account called allowance for doubtful accounts. And we credit that on, or record it on the credit side. So the allowance for doubtful account is an account that we use whenever there is an actual bad debt later on, or whenever there is someone or one of our credit customers default in their accounts receivable. So in this case, we just debit bad debt expense and credit allowance for doubtful accounts. And that's the adjusting entry used under the allowance method. It's done once a year or once every accounting period. And again, this is how it's recorded. Later on, when we know that there's an actual default, we're going to debit the allowance for doubtful account and we credit the accounts receivable. And we'll see that in a future slide. So, since Xtone does not know which customer account will be uncollectible, a contra asset account called allowance for doubtful account is credited for the bad debt. So the allowance for doubtful account, as I said before, this is a contra asset account. It's opposite to the accounts receivable. And actually later on when we prepare the balance sheet, you'll see that this goes below the accounts receivable and it's deducted from the accounts receivable. So it's just an allowance that we create just to show how much we anticipate that or we expect that is going to be not collected from the accounts receivable. So the preceding adjusting entry affects the income statement and the balance sheet. On the income statement, the $30,000 of bad debt expense will be matched against the related revenues of the period. And that's a good thing about the allowance method, is that you match revenues and expenses of the same period. We don't do that in the direct write-off, because in the direct write-off, we record the bad debt expense when it happens, and usually this is in a period different from the sales period. So on the balance sheet, the value of receivable is reduced to the amount that is expected to be collected or realized. So in this case, we have the $200,000, which is our accounts receivable, minus the allowance for doubtful accounts, which is a $30,000, and that will give us a net realizable value of $170,000. I like to call it net realizable value of the receivables, or NRV. So we give it the short NRV. Okay. Now let's see the write-off the allowance account. So whenever there is a customer who doesn't pay their accounts receivable balance. So when a customer account is identified as uncollectible, it's written off against the allowance account. This requires the company to remove the specific accounts receivable and an equal amount from the allowance account. So let's see. On January 21st, which is again, as you can see, this is happening the following year, John Parker's account of $6,000 with Xtone Company is written off, and we record that as follows. So we record it when it happens, so it's not an adjusting entry anymore. This is an actual entry to record the write-off of one of our customers, and in this case here it's John Parker. So on January 21st, we debit allowance for doubtful accounts and we credit accounts receivable for John Parker. Remember, allowance for doubtful account has a normal credit balance. Now we're debiting it, so we're reducing it, or in other words, we're taking part of it. And then we are canceling the accounts receivable by crediting the accounts receivable for John Parker. So because allowance for doubtful account is based on an estimate, it will normally have a balance at the end of the period. As a result, the total write-off to the allowance account during the period will rarely equal the balance of the account at the beginning of the period. In other words, when we make the estimate, this estimate is never going to be an exact estimate for the actual write-offs. So we make an estimate, in this case, of $30,000, The write-offs could be something below that, like 25,000, 27, 28, or it could be more than that. It could be 31, 32, 33. So it depends on the situation. So our estimate is never going to get exactly the same as the actual write-offs unless we're really lucky. And this in real life would be very hard to precisely estimate. So the allowance account would have a credit balance at the end of the year if the write-offs during the period are less than the beginning balance. So in other words, we made an estimate of 30,000 and the total write-offs during the period was 28. So we'll end up having a credit balance of $2,000 in our allowance for doubtful accounts. On the other side, the allowance account will have a debit balance at the end of the period if the write-offs during the period exceed the beginning balance. So we made an estimate of 30,000 and then we ended up having 33,000 write-offs. So in this case, our allowance for doubtful account would end up having a debit balance, which we have to compensate for the following year. So think of the allowance for doubtful account as a bucket. It's a bucket that we fill it with an adjusting entry, and the adjusting entry fills the bucket. In our case here we had the $30,000, and the $30,000 was the amount that we actually filled this bucket with. And then whenever we have actual write-offs that we need to do because we know that customer or that client is not going to pay their accounts receivable when we have to write it off, then in this case we start taking some out of the bucket. So in our case here we had $6,000 for Mr. Parker that we had to write off. So we used $6,000 out of our allowance for doubtful accounts. So during the second year of operation, Extone company writes off $26,750 of uncollectible accounts. And you can see here, we started with a balance of $30,000 because that was our estimate. Our total write-offs, and it's not just coming from one write-off, it's several write-offs, ended up to be $26,750. And this including the $6,000 account of John Parker recorded on January 21st. So see here, it's 6,000, and then we have 3,900 and some other values which happened during the year. So allowance for doubtful accounts will have a credit balance of 3,250. Why is that? Because we had a balance of 30,000, we wrote off 26,750, so we end up having a credit balance of 3,250. If the Extone company has written off 32,100 in accounts receivable during the second year, allowance for doubtful accounts would have a debit balance of 2,100, and we'll see how it works. So we started with this balance that we created due to the adjusting entry, 30,000, and the amount of total write-offs was 32,100, including 6,000, the 3,900, and more. Since our write-offs were more than the beginning balance, then we end up having a debit balance of 2,100 for the allowance for doubtful account. So the allowance account credit balance of 3,250 and debit balance of 2,100 in the preceding illustration are before the end of period adjusting entry. And by the way, it's either or. You cannot have a debit and credit balance. It's either a debit balance or credit balance. But the statement is just trying to explain that these balances, if they exist, these are before we do the end of period adjusting entries. After the end of period adjusting entry is recorded, allowance for doubtful accounts should always have a credit balance. So we reinitiate it again to bring it to the credit side, and we'll see the process for recording that. So an account receivable that have been written off against the allowance account may be collected later. Like the direct write-off method, the account is reinstated by an entry that reverses the write-off entry. The cash received in payment is then recorded as a receipt on account. So let's see this example here again. Assume that Nancy Smith's account of $5,000, which was written off on April 2nd, is later collected on June 10th. Extone company records the reinstatement and collection as follows. So here we have Nancy, we wrote off her accounts receivable balance, and then we realize, you know what? She wants to come back and pay us. So something happened in her business and she was able to recover. So what we do is that we reverse this writing off journal entry. So we debit accounts receivable for Nancy Smith and we credit allowance for doubtful accounts. So when we credit the allowance for doubtful accounts, we're bringing back the balance to the allowance for doubtful accounts. Then we collect the cash, so we debit cash and we credit accounts receivable for Nancy Smith. Now let's see how we can make an estimate for the uncollectibles, because in the previous examples we were given $30,000 to be the estimate. Now let's see how we can make this estimate. So there are two approaches for making an estimate for the uncollectible. One of them is based on the income statement, and we call it the percent of sales method. And the other is based on the balance sheet, and we call it analysis of receivable method or analysis of accounts receivable method. So the allowance method requires an estimate of uncollectible accounts at the end of the period. This estimate is normally based on past experience, industry average, and forecast of the future. So let's start with the percent of sales method. I think it's very logical, very easy. It just needs some practice to make sure that you understand it very well. So since accounts receivable are created by credit sales, uncollectible accounts can be estimated as a percentage of credit sales. Because that's the reason we have accounts receivable, because we offer credit sales. So we think we try to make a calculation of how much is our credit sales, get a percentage of it based on historical experiences, and then try to apply that to our estimate for the uncollectible accounts. So let's see this example. Assume that following data for external company on December 31st before any adjustments. We have the balance of accounts receivable to be $240,000. And we have an existing balance of allowance for doubtful accounts of $32.50, and it's credit balance. And it's very important that we know what is the balance for the allowance for doubtful accounts, because as we've seen before, the ending balance for allowance for doubtful account can end up being credit or debit. We prefer to have a credit balance, but in some cases we can have a debit balance if the write-offs are more than our balance. Then we have total credit sales of $3 million, and the bad debt as a percentage of credit sales based on our experience is 0.75%, which is less than 1%, so it's 0.75%. So bad debt expense of $22.5 is estimated as follows. How are we going to do that? We get the credit sales, which is the 3 million, multiplied by the bad debt as a percentage of credit sales. So that's 3 million multiplied by 0.75%, and that's going to be $22,500. So how we do the adjusting entry at year end, we just record December 31st, and we debit bad debt expense and we credit allowance for doubtful accounts for the value that we just estimated. So as you can see, it's pretty straightforward, very simple, nothing really challenging. It's just a straightforward kind of calculation where you get your credit sales multiplied by the percentage that it's going to be given to you, and that would be the amount used for your adjusting entry. How is this going to affect the balances for the bad debt expense and the allowance for doubtful accounts? You can see here we debited the bad debt expense for $22,500, and we credited the allowance for doubtful accounts by $22,500. So as it says here, after the adjusting entry is posted to the ledger, bad debt expense would have a new adjusted balance, which is, or have an adjusted balance of $22,500, and the allowance for doubtful accounts would have a new balance of $25,750. How did we get the $25,750? Because we had an existing $32.50, and we added to it $22.5, so that brought the new balance to $25,750. The amount of the adjusting entry is the amount estimated for bad debt expense. So this estimate is credited to whatever the unadjusted balance is for allowance for doubtful accounts. So I'll stop here. In the next video, we're going to see the other method that's based on percentage of accounts receivable.